Welcome to the Weekly Trend, a podcast for navigating the markets through the lens of technical analysis. The Weekly Trend podcast is provided for educational purposes only and does not constitute any professional advice. Listeners should not act upon the information or content without first seeking advice from a registered financial planner.
Welcome back to the Weekly Trend podcast. Today is Friday, December 6, 2024. S&P 500 currently sitting at 6084. I'm David Zarling. I'm here with someone that was not invited to the college football playoff selection.
Whoa.
Ian McMillan.
Easy.
Well, I just think the outcome would have been different if you had been on that committee.
Oh, on the committee, yes. If I was on the committee, of course it would be different. I'm still so sore from all of this. I really thought they'd put us in. That's my heart speaking. My financial brain understands why a decision to put Alabama was made.
Yeah, they went with the brand. But at the same time, don't you think, I think we talked about this, South Carolina would travel?
I think they travel way better. This is clearly, this is a down year for Alabama. They haven't stressed about getting in the playoffs for 12, 15 years probably. So.
But Indiana's in?
Indiana's in.
Admittedly, I'm confused. And I'm
SMU's in?
Yeah.
Very bad schedules. I'm just saying if these programs were stocks, they might be going up, but they're not relative outperformers. But I've cried all the tears I can cry, Dave.
Well, now you get to dry those tears somewhere down in Florida, I guess, against Illinois.
You know what's not making me cry?
Stocks.
Yes. Stocks keep going. A lot lower volatility, kind of march upward we didn't have a podcast last week. So I hope everyone enjoyed their Thanksgiving.
Yes.
But yeah, we've got VIX at lowest area since the summer. We're down to 13 on a VIX. And we're back into this melt up, kind of trade back and forth. Right now, it seems to be we're back in mega cap tech outperformance. Would you agree with that?
Yeah. I think you described a few episodes ago the tightrope of rotation that would need to take place to hold this market because really, on a relative basis, mega cap tech hasn't done anything since summertime. So we're talking about 6 months of sideways performance versus the S&P. And you saw things like financials, small caps do well. And now if those all-stars are sitting in the back pocket of this market and are about to reassert themselves, it's going to be really hard to keep this market down.
Well, and so we've had, Amazon's looks great, has had a good chart, but I want to say the big one this week is Apple. 4-month highs, all-time highs for Apple.
Mm-hmm.
That is a massive tailwind.
Yeah, same with Meta. Meta's Amazon, Meta, Apple, all brand new all-time highs. Microsoft has some work to do. NVIDIA still showed strength while semiconductors cooled off. I will say, November was typically, seasonally speaking, a strong month for semiconductors, but we didn't see that on semiconductors in November. So
what's going on there?
Yeah, that's worth paying attention to, if you're going to look at alternative. But at the same time, you look at semiconductors on a monthly basis, and they've been compressing since August.
Can you imagine? That is a lot of pent-up energy, right? You're a trend follower, so kind of trend following 101. Consolidation should go in the same direction as the trend that it arrived in.
Yep.
And so that would take you up. That is a solid 6 months of consolidation on semiconductors. Right into really holding that 200-day moving average. If this thing breaks higher, you would likely, you're going to get more than a few days or a few weeks I mean, this could really be a big first quarter for semiconductors if SMH can get to new highs. Get out of this consolidation.
And then you throw in things like IGV and XSW ripping through to new all-time highs. And when I say that, I mean just like a hot knife through butter, which is great information. So now you have even more participation showing up. And, we had the advanced decline line for NYSE, S&P, NASDAQ make new highs. So confirming the new highs in the market. Got bullish percent, a breadth measurement sitting at midfield and X's, not overextended. I guess you'd have to look at semiconductors in the months ahead if that they continue to cool off on a relative basis. That's kind of a warning sign. But if they come out of this compression to the upside, like you're talking about, which is typically what happens in uptrends as you move higher out of consolidations, it's going to be very hard to keep this market down, but too high, too fast.
Oof. Yeah, it doesn't seem to be in a lot of individual stocks. I mean, you talked about IGV, XSW, kind of cruising through these previous highs. And you've seen that on a lot of individual names as well.
For sure.
So we just talked about cruising through new highs. We talked about consolidations. One area, and this goes back to the mega cap one, or I guess really two, some overlap there between them. But big weeks from your Mag 7 and your FANG stocks.
Yeah.
And those had consolidated. I mean, those charts were very similar going into the week. I mean, just beautiful, if I can use the word textbook, consolidation on top of previous highs. Then you had coupled that with Apple breaking out, Amazon. There's a lot of tailwinds there, and we've seen it play out. Now, is it okay? We're gonna run back to full throttle NASDAQ mega cap tech. I don't know if I'm there yet. If I pull up a chart of, and you mention NASDAQ versus Russell 2000,
right?
This is still messy.
Yeah,
this is not a trend. Well, it's a sideways trend.
Yeah, it really hasn't done anything but frustrate people, that relationship, for a full year.
I mean, right? if we're here next Friday and Russell had a huge week, I'm not shocked one bit.
Nope. And small caps versus S&P continue to hold the breadth thrust levels that are from November of 23. So basically, performance has been like kind in a range when you look at small caps versus large caps, or when you look at large cap tech. Plenty of opportunity to go around.
Coming into the end of the year, we got everyone. I was thinking about this morning. So we know, and you brought up seasonality, and I think, right, so December, first half of December is supposed to be kind of like sideways, and right? Is that true?
Yeah, I mean, that December is typically.
You had also posted something in Chart Central the other day.
Well, there's seasonality about what happens after an election and going into the inauguration.
Yes.
That you typically see upside into the inauguration, which is January 20th, I believe. And then you see some cooling off from a seasonal perspective. And so we continue to see stocks right on that road, that you see positive performance from election day through inauguration day. You could see that happening, regardless of the narratives out there, regardless of World War III, drones, earthquakes, cabinets, who's in the cabinet, those that like.
I mean, so, and I'm pretty sure we're looking at the same graphic, the one you posted. So election through inauguration, the S&P average is up 5%. I think you got to participate in that. I mean, imagine it like 5%. I know that sounds, so and that's what, like 2 months?
Yep.
2 months from election to inauguration, maybe 2.5-ish. So let's annualize that. I mean, that's a 30% year. That's a solid move.
It is a solid move. And then you typically see it cool off after the inauguration, going into summer of next year, and then once you know it, a rip roaring second half for seasonality. We're in that best 6-month window right now, regardless of the seasonality for an inauguration to election. We are in, I think you put it, we're 1/6 through the 6-month period that goes through April. November was pretty good. So far, so good. Stocks confirming their seasonality. Again, it's not a predictor. You don't sit here and say, oh, for sure, stocks are going to be up between now and election day, or I'm sorry, inauguration day. But you do pay attention. If stocks aren't, okay, that would be another warning flag. That would be another, if semiconductors can't get going, if stocks are weak, that's how seasonality should be used. It's not, this is what's going to happen. It's when it doesn't happen that you pay attention. When the offensive lineman doesn't block you, that's when you'd have to say, oh, are they running a screen? What do we got going on here? Same thing with markets. If they're not doing what they quote unquote are supposed to be doing, well, we better, maybe this market is weaker than we think. Time will tell. We don't have that yet. We still have, if tech stocks get going here, man, they could cover a multitude of sins across the rest of the broad market. You look at enough charts, though, plenty of other stocks coming out of bases. Whether you're looking at ARC funds or you're observing some of these, gaming stocks. You brought up travel.
Cloud computing, Sky looks good.
Yeah.
SKYY. Yeah, there's a lot of stuff. Fintech. Yeah, we've talked about, internally, iBuy, eBiz, ONLN. And then, right. And that's kind of an interesting, maybe juxtaposition is the right word, because so I would say there's more themes and sub-industries popping up, but then you've got RSP versus S&P going out to 6-month lows this week. So interesting. I don't know. Breadth.
That actually might be
breadth. I think both sides have an argument.
Well, that might be the clue of the week, just that mega caps are leaving the station. What you just mentioned with
they are
equal weight versus cap weighted S&P.
XLY. Consumer discretionary has moved in. You want to talk about things that have been ripping since the election?
Mm-hmm.
Cow.
Well, and there's clues there too. You look at equal weight discretionary RSPD versus equal weight staples RSPS. It continues to follow through after breaking through a base that goes back to 2007. You're talking about a 17-year base and discretionary stocks.
Well, the consumer can't be doing that good.
So they tell us.
Why would I buy these stocks?
Yeah, they continue to perform well.
Growth versus value, I think, is still pretty strong. Growth. When we look at SPYG, SPYV, that never fell off a ton.
I would argue the cleaner look on that is RPG versus RPV.
Yeah.
And that's a really clear base that it really appears that large cap growth is
look at that. Yeah.
Departing to the upside. And then you throw in all these other.
I think you're going to be. Yeah.
Well, it's not like Russell's not participating. It's IWM is still not surprisingly having some price reaction to the November 2020, 3 years ago, what we now know to be a blow-off false move at that time. It would make sense that small caps would struggle right here. But man, if they clear that, if there's more demand than supply clearing that level with nothing but blue skies ahead, again, more bullish behavior from institutional investors. I know there's a lot of doom and gloom out there, but it's not what we're seeing from the charts.
Eventually, there will come time for that.
There will be.
Eventually, we will roll over. Could be violent, could be slow. I don't know. It'll show up on the chart. But as far as being exposed to stocks, nothing. We're in December, and I don't know if our mantra has changed whatsoever in the last 12, 14 months.
Yep.
What about outside stocks?
Like foreign?
No, other than stocks. Other assets.
Assets, yeah. Well,
Boring.
other than Bitcoin, boring.
Yeah.
Other than crypto, I mean, the long end of the duration for bonds, treasuries are still anemic. There's still opportunity in convertible bonds if you have to own fixed income. But then other than that, you've got to go short. And, you've got T-bills still holding up fine and paying, 4.5 to 5.5%. Meanwhile, that 40%, and we're still seeing with prospective clients that come in, they're still holding these 60, 40, 70, 30 portfolios and just
Really?
paying the price for having exposure to treasuries and long duration. We'll see. I mean, all these relationships can change, but it doesn't. The thesis for the new 40-year cycle for higher rates has not changed. That is still intact. You have what I would argue is a risk on, risk off, or animal spirits type indicator like Bitcoin hitting a round, nice fancy round number like 100,000.
Yeah.
You have more speculative stocks, your smaller software stocks doing well, and financials are holding up.
Financials hold up. I mean, we've had three. So 3 sectors negative since the election. Healthcare, which, I mean, it's been terrible all year. It's the worst sector. Materials and real estate. And I think your other laggards are utilities, energy, and staples. So, and discretionary, definitely your best sector since the election. We can talk about credit spreads. We talked about the VIX earlier. If I was to climb up on the mountain and look out for incoming bad weather, I don't see it.
When your top 3 sectors year to date are communication services, financials, and discretionary.
Not even tech.
Yeah, right. And that doesn't really scream risk off by any means. And your worst performers are healthcare, materials, real estate, staples. I mean, I'll go back to the late John Borman. We should just shut up and enjoy this.
Got to.
Why fight the trend?
Turn the TV off. I mean, unless you want to watch like the sports update or something, but turn it off. Markets are up. It will eventually end, and we'll all get to cry in our beer. If you come in for adaptive education, we talk about that. Not going to pick tops, not going to pick bottoms. We're going to capitalize on the 90% in between. If you've done that during this uptrend, then we're fine.
Right. Like you said, enjoy family, participate in your community.
It is the holiday season.
Get off the TV other than for your favorite show or sports, like last night's game, Packers-Lions. What'd you think about that 4th down call at the end of the game to hand the ball off? They could have kicked the field goal at that point.
What yard line were they on?
I believe they were like on the 20. So
what was the point? He just didn't want them to get the ball back, for sure.
Yeah, Dan Campbell was able to get the clock all the way. There's a couple curiosities there. So if I'm recalling it correct, they're near the 20, 4th down and 1. There's about 40 seconds left. They run the ball and get the first down. First of all, the guard steps on Goff's foot and he falls down, but is able to get the handoff off. Could have been an absolute debacle. So if they don't get it, Packers have the ball in the 20 and have 40, 60 yards to go to get a field goal with 40 seconds. Not insurmountable.
No, not. I mean, a professional football team can do that.
Yep. But I suppose he's just saying, I'm committed to my offensive line. We're going to get the first down, and you go. And the other curiosity was even after the first down, they had 2 timeouts left. They let the clock go down to 2 seconds, call their second timeout, kick the field goal to win it. But you also could have called a timeout with 8 seconds left in case there was a muffed snap to allow another kick.
Yeah.
Well, it's just interesting that, I mean, a lot of people would have kicked it with 40 seconds left. And yeah, that would have left some time for the Packers to do something with. Pretty gutsy.
I bet Dan Campbell trades meme coins.
He's got the monkeys with the laser eyes.
Seems like a ballsy fella.
Yeah, I mean, well, earlier in the game, they were on their own 30. and went for it on 4th and 1 and didn't get it. Whew. But
Dan Campbell owns 4X S&P index funds.
he invests over in Europe.
So he can feel the thrill of 4X.
You know, and but maybe it was, I think they were decimated on defense with injuries going into the game, and maybe he felt keep my offense on the field, get the yards, and it worked. I mean,
it worked.
Whew, I tell you, I'm not even a Lions fan, and I was like, wow, this is crazy.
Dan Campbell goes long right before the earnings report.
YOLO. But hey, they're arguably the best team in football, along with your.
They are. I think they're the best team. I do.
Yeah, when their defense is healthy, because they've been crushing people, except for the Vikings and Packers, which were both, I believe, 3-point games.
And those, I mean, you got some rivalry stuff there, which always comes into play.
Yeah, division games.
Barely crush your division rival.
Yeah, I'm not a betting man, but if you are, why in the world would you ever bet on a division game? I have no idea.
I mean, you'll have three of the NFC North teams should make the playoffs, right?
Hopefully. That'd be fun. At this point in the season, they would deserve it, but there's a lot of season left. But I mean, even look at like Chiefs Raiders. That game's way closer than I thought it would be, but it's a division game.
Yeah.
I don't know. Pretty ballsy, but he gets the rest this weekend. Knowing he went and got it on 4th and 1.
Yeah, active management.
Yep, trend is the trend. I mean, he hasn't deviated from it all season long. He's gone for it on 4th short.
They were good last year. I mean, they were so good last year.
Yeah. Didn't they lose in the NFC Championship?
Yeah, they lost to the Niners.
Well, I give their offensive coordinator a lot of credit because I guess he came back this year. He could take a head coaching job somewhere. And he stayed because he felt like he had unfinished business. Give him credit for that.
Good for him.
Yeah.
Could have. Maybe he wants to stay and build.
Yeah. Build great things. Love to hear it. So where else, Ian, should we, now that we're half sports talk radio and stocks?
We could get on like an AM station probably somewhere. talk sports and stocks.
Like a free cable news network type thing, like Wayne and Garth, Wayne's World.
Yeah. I guess we got YouTube now.
I've heard about this YouTube.
Yeah, I don't know. I mean, risk assets, relationships. I mean, we've got S&P high beta versus S&P low vol has really fixed itself a lot. It's, again, back to where a lot of these, relationships and absolute price charts were back to where we were in the summer, June, July. Things are fixing themselves, or just things that have been healthy have stayed healthy. I know I talked about for a little bit, on the podcast, you would ask, well, what's one thing that and I would talk about high beta versus low vol.
Mm-hmm.
Well, that's now off the list. So, right. And don't have anything in my, I wouldn't say we have some massive arsenal of things we look at. You brought up advanced decline line earlier. All pretty simple stuff. And there just continues to be very few, if no, warning signs out there.
Well, and what I find fascinating too is the AAII, so American Association of Individual Investors survey.
Yes.
Has more bears than bulls right now.
Wow. So you're saying we're not at euphoria?
Yeah, not at euphoria. I guess you could kind of see the signs of that starting to, pun intended, bubble up, because you are seeing meme coins, buying JPEGs starting to show up again.
Yes. There
but
is.
That went on for like 6 to 12 months before it topped.
Yeah. 2020, 2021.
Right. But the fact that there's still skepticism, says a lot. And that's happening right as it looks like large cap growth is leaving the station. That's hard to get in front of that train, man. I don't know why anybody would do it. Why park on those tracks?
Maybe breath does die up a little bit. There's less to choose from going into 2025. I don't know. But we know that the S&P is still has a 33% weighting towards tech. So that's a That's a big one if it's moving in the right direction and all the right components are moving in the right direction.
And you even had international stocks participating the last couple of weeks. You look at something like BU.
Wow. Okay.
Wow,
look at the DAX.
Yeah. DAX,
Holy smokes.
highly correlated DAX to U.S. markets. I mean, IYT still holding its prior highs, and you have things like airlines that have gone bonkers to the upside. You mentioned cruise lines, overall discretionary. There's a lot to like. And I'm not saying that international is where you need to be, maybe with the exception of Argentina, but the fact that they're participating as well, not a lot to complain about. I don't have really much else to cover, and maybe that's a red flag.
Hey,
things are so clear.
Yeah, but we also, I could have made that argument, and it's calm waters. Again, don't know what 2025 brings. See the cards that get dealt.
Well, yeah, it's
good year in 2024. We got 3 weeks to go. Thankful for a 28% year on the S&P. Oh my gosh, how often does that happen?
That's a great point.
If you are curious, it's not very often. Maybe once a decade. Do you get maybe twice a decade?
Yeah, just enjoy it. It's not going to be like this forever, and we'll know by the math, right? It's a numbers game. If S&P 500 is below its October lows, that would be step one. If we're below a 200-day moving average on S&P, which is currently sitting at 54.80, the line in the sand keeps getting moved higher, right? We used to talk about 4,800. We used to talk about 5140. We used to talk about 5,600. Well, the line in the sand keeps moving higher, and we'll know if sellers have control if we're below those levels. It's really that simple. We don't have to overcomplicate it. Markets are hard enough the way they are. Enjoy what we got right now, 2025. It's markets. It's every year is a once in 100 year event.
Yep.
And so
something weird will happen.
Yep.
We had a VIX in just August, we had a VIX at 65.
Yeah. Pretty crazy.
And I'm going to be honest with you, and we tell clients this, we got a client letter going out. All this, fun stuff, watching your 401k go up, your IRA. I'm going to be honest, it's not because your favorite politician won the election.
Right.
It's not.
Totally agree. And that was the topic du jour. We have all sorts of bricks in the wall of worry currently, whether it's geopolitically, whether it's domestically, politically. There's plenty always to worry about. That's why we focus on price. Price is the final
arbiter. I do some ice fishing. Has ice fishing started yet? When does that start in Wisconsin?
I think we need a little more ice on the lakes.
More ice, okay. Too early.
Yeah.
It's more like a January, February thing.
Yeah, I'm thinking by the end of this month, you might have what you need, at least on the lakes around here. No lakes freezing down by you, is there?
No.
Although I thought I saw Charlotte had snow flurries the other day. Is that true?
It's been in the high 20s in the mornings.
Woof.
Yeah. It was 28 this morning. I took Connor to school.
Ian's cold.
Very.
Well, I should highlight the supporter of this podcast, the Adaptive Select ETF, which is listed on the NYSE under ticker ADPV, which helps investors access two of the most prevalent factors in markets, momentum and relative strength. Using proprietary identification methods, the Adaptive Select ETF attempts to own the strongest 25 large cap stocks when the market is in an uptrend. And since not all market environments are the same, Adaptive Select seeks to prevent extended declines by moving to short-term treasury bills and cash during long-term market downtrends. Investors can find out more, including how to invest in ADPV, by visiting adpvetf.com or calling 1-833-880-5200. As always, investing involves risk, including possible loss of principal. ADPV is distributed by Quasar Distributors, LLC. We really appreciate their support. We love that you guys listen to this. We've had some really nice comments on social media from people who listen to this regularly during 2024, and we really, really appreciate that. And it means a lot when you share that with your friends and give us high rankings, so please do that. lets us know that what we're doing and providing is worthwhile to you. So like Ian said, we hope you guys had a wonderful Thanksgiving. And man, how quick did 2024 go by, Ian?
So fast. Oh my God. Especially now with kids, it just, everything goes by too fast.
Yeah, it flies by. Anything else you want to cover before we call it an episode?
There's not. Thank you for ADPV for supporting the podcast. Yeah.
Yeah, no, appreciate it, Ian. Great to be back on here with you. We'll aim to do it again next week. And thanks everybody for listening.
Have a great weekend, everyone.